Hi guys, this is Investing with JYK and I'm Yao Kai. Today I'll discuss with you guys the world uranium market. When you talk about the uranium market, you cannot skip the Fukushima. That's the most recent large-scale nuclear accident, and it happened in 2011. Japan subsequently shut down all its nuclear reactors, and that wreaked havoc in the whole uranium market because the majority of the uranium is produced in the world is consumed by reactors for electricity, and some of that is used by naval vessels, but that doesn't get affected, so we'll not pay attention to that. So if you look at Japan, in 2011, before the shutdown, you can see here that they had 47.5 gigawatt of electricity capacity before the Fukushima incident, and that is a huge percentage of the world. And we can see by 2011, this is the IEA website. 2011, we're looking at total total net electrical capacity is 380. So if we do a division, that becomes 47.5 divided by that, so we get 12.5%. So that's a very important number. So the amount of fuel consumed is basically equal to proportional to the amount of electricity is generated. Obviously, as technology gets better, it slowly goes down, but very, very, very slowly. And these nuclear reactors are fairly efficient to begin with, right? So we basically have 12.5% of the world demand coming offline. And that has wreaked havoc, as you can see from here. At 2011, we were coming out of the financial crisis market downturn, and the uranium market was turning up. It was at 72, and suddenly now it's at 20, right? So before all the lowest it went, it was 18, right? So that's a spot market, and then the contract market typically $10 more than the spot market. Now, so that has destroyed the uranium market. So why do we want to invest there now? Because the argument that I have that uranium will make a huge upturn from this point on, and the reason being, following this downturn, all the way throughout this downturn, there's no production cuts, and by the end of 2016, there was a production cut, and that's here. This is beginning of 2017. Kazakhstan said they would. This is in Kazakhstan Prom. This is the Kazakhstan's uranium mining company, the state-owned. It says it will cut 10% of its own production, which is equivalent to 3% of total world uranium production, right? So 3% is gone. So 12.5% demand decrease, now 3% supply decrease. And then Chemical, just recently in November 8th, this video is recorded at December 8th, exactly a month ago, says it would suspend McArthur River. Right, Key Lake is a mill. McArthur River is a mine. So they said they will suspend McArthur River for at least 10 months. Right. So what does McArthur River mean to us? If you look at it here, it's the biggest mine in the world. It's 11% of the world production. So 11% is gone. So we're now looking at 14% of the world the world production gone. Right? And then just 4 days ago, Kazakhstan Prom again said they're going to cut production by 20% this time, and then it would approximately be 7.5% of the global uranium production. That means it's another 7.5%, so you got a 3%, a 11%, you got a 3 plus 11 plus sorry, oops, then plus 7.5. So 21.5% of the world uranium production is going to be gone. So this is a typical case of a cyclical market. Uranium mining, as with almost all mining business, is very cyclical. You either get demand creation when the price is too low because the utility of the thing is just so good, you want to use it for more things. So an example would be gold in the 1970s. People started using it for tooth because it was cheap. It was not 1970s, just before 1970s, 1960s. People started using those as a material for tooth implant, and you rarely see those now because it was so cheap. They found a new utility for this gold. Now you put it in your mouth. And the other way of the market balancing is supply destruction, and this is the classical case of supply destruction. Right, so now you got a supply destruction of 21%. Would it immediately turn up? No, because Japan has been taking, as we have seen in this chart, there's this long-term contract market. Most of the almost 90% historically of the world uranium market takes place in this contract market. And then Japan has obviously had contracts for like 10 years. These are 7 to 10 years. And in 2011, they shut down all the reactors, so that they had no use for any of the uranium, but they keep on taking delivery. And what they do, they turn around and sell it to the other side on the spot market. So basically, they buy high and sell low because otherwise, if they violate their contract, then probably there's penalties attached to those. But they also keep some inventory for themselves. Right, so that's the state. So we got we got a lot of supply destruction. 20% almost of the world, 20% of the supply has gone. All right, so let's look at, can someone else step up and fill that 20%? So these are the public uranium companies. You can see there aren't that many. If you look at this and then you put on top the Kazakhstan prom, which will go public next year, according to the Kazakhstan's plan. And then you may be a couple of Chinese companies, but I don't think China has that many uranium anyways. That's what you get. And then they don't have that large capacity if you look at this, right? So this thing is basically dominated just by Canada and then Kazakhstan and a little bit of Namibia and Australia. And if you look at any other, if you look at any other companies, here's a chart. You can see these companies, they are producing 0.5 million pounds. The world chemical is 24, right? So you need like close to 50 of these guys to even match chemical. And chemical just cut half of its capacity. As you can see, it basically had two big mines. It had Cigar Lake and MacArthur Lake. It cut, I think it's, sorry, I'm losing where the thing is. Yeah. MacArthur Lake and Cigar Lake, half of that is gone. Right. And then you look at cost. Can someone, is the current price an incentive? I mean, GoviX is in Africa. It's actually a fairly cheap producer, but it probably has a huge political risk. This thing says it has $25 of cost. That's cash cost. That's not counting any startup cost. So basically, the setting up of a mine, if it's free, it'll be 24. If the borrowing of all your money is free, if you don't pay any interest on any of your borrowings, it's 25. Sorry, 25. So yeah, 24, 25. So if you add this on, typically they go to about like $60. I used to have a chart that I couldn't find. Basically, it tells you that the world the marginal players, so basically if you add all the production up, even including the most expensive ones at about $60 a pound, that doesn't cover the entire world. The entire world consumption is slightly higher than that. And the shortfall is currently being covered by basically nuclear warheads from Russia and US. They're disassembling those. And then there's this thing called underfeeding for there is a thing called underfeeding coming from the enrichers. The nuclear uranium can't be used directly into in the reactors because it has to be enriched, going to like about at least 3% U-235. Otherwise, most of it is going to be U-238, which is what's usually known as depleted uranium. It's not very useful. So in order to enrich that, they basically gasify it and then put it in a centrifuge, and then they spin it, and then the heavier things, which is 238, will be on the outside, and then the things in the middle is going to be higher concentrations of U-235. And the way that works is that the uranium miner would tell these enrichers that, oh, okay, so here is the amount of uranium I'm giving you, and I expect you to produce so much enriched uranium. And contractor would say, okay, fine. So they would do that, and they would have spare capacity in their enrichers in these huge centrifuges. And then once they have delivered their promised amount, they would keep spinning the whatever is left over and extract more enriched uranium and sell those again out to the market. And that is essentially underfeeding, and that's part of the supply as well. And okay, so here's the supply story. You got some underfeeders, some underfeeding going on, provided they have capacity. Actually, the capacity is actually declining. There's just a U.S. One that's probably declaring bankruptcy soonish, and then the two major players cut huge amount of production. Now let's look at the demand side. So first, let's figure out how much uranium actually contributes to the cost of electricity from in a nuclear reactor. That tells us, how sensitive they will be to the uranium price. For example, if the thing is a tiny portion of the actual cost, most of the cost is setting up its capital cost, basically setting up the reactor and safety and cleanup. Then the fuel costs, they're probably not very sensitive to that. And that actually is exactly the case. If you look at this stuff, it says for 1 kilo, actually you can just look at this, right? So the fuel cost is total fuel cost is 0.4 cents per kilowatt hour. This is from the World Nuclear Org. And 43% of that is the actual uranium. All these things are not uranium. These are not sensitive to the uranium price, right? So this I think has a cost of. I thought this thing was like 31. So March 2017, right? Something like March 2017 would be, yeah, something like 33. So at $33, because this is going to be contract price, because usually people don't think about the spot price. I think there was something mentioning the price here. Don't remember. Anyway, so yeah. So that's 0.39. If you multiply by 43%, you end up with 0.16 cents per kilowatt hour, right? For the uranium. And if you look at the I had a levelized energy cost. Sorry, oops. All right, here. Sorry, missed this stuff here. Sorry. So here is a levelized life cost of the mine. Oh, sorry, of the electricity. Advanced nuclear is about $100 per megawatt hour, which is basically 10 cents per kilowatt hour. Divided by 1,000, and then if you do a division, the uranium cost is like it's about 1.67% of the total cost of nuclear electricity. So say the thing doubles, now you're gonna pay 0.16 cents more per kilowatt hour, which is nobody even feels that, right? Because it's like 1% more, 1.26% more cost. This thing goes up by 10 times. It only increases the cost by 16%. So you go from 100 to 116, which means you now pay 11.6 cents per kilowatt hour. Right? So that means from the demand side, even if the price goes up by 10x, there will be a demand for this energy and for this fuel, because they can't afford to shut down the nuclear reactor, because those shutdowns are super expensive. And all right, so here is where they're coming from. This is the re-enriched. This is the spinning of the enrichers, and then those are recycled fuels. Basically, the used fuels, you put it in a centrifuge again, try to get a little bit more U-235s out of it. Military grade uranium, so warheads, you blend it down. These are like 90% plus U-235s. You blend it down to like 3-5%, and you can sell it to the nuclear reactors. All right, and now let's look at the demand itself in terms of consumption. The consumption obviously fell in 2011 because, well, you can look at this graph, and clearly this fall is probably due to the financial crisis, right? You got a financial crisis, electricity consumption goes down. 2010, it goes up again. 2011, that's Fukushima. That keeps dropping. 2012, that's when Japan has completely shut down everything. And guess what? You can see this slow creep up. It's now gone from 2.3 to 2.4. So you're now about 5% up in those years. So 5% up, more demand, but compared to 2012, but the supplies actually dropped. And the other thing you want to look at is how many more reactors are being built. Right? So the number of reactors in total, as you can see here, is 448. And they are typically similar in size. They're around, the new ones are typically 1 gigawatt. And then the older ones, some of them are 600 megawatts and whatnot. But let's consider them are about the same. Even if they're not the same, the new ones are typically more powerful and consume more fuel, right? So at least we're estimating this conservatively. And then you got 59 being built. And China, out of all, is building a quite large number of 19 of them is currently under construction. So now you say, how long does this stuff take to build? Well, in the China's case, we can take a look at the 3 major Chinese nuclear power plants. typically 6 years, right? So the first one, 86, 91, 96, 2001 is a 5. This is this takes a little longer, 7. This is a 4. This stuff is 4. This is a 4. This is a 5. So 4 to 7 years in this case. And then here, in here, unfortunately, I don't see where this started construction. Whoops. Anyway, so we're gonna look at the other one. Yeah, this one is putting, the new ones are coming here. So construction starts 2015, 16, and is planned to be finished. And typically Chinese are fairly good at following their schedules. And then the construction starts, the older one, 6 years. Here is 6 years, so 6 years. So it takes 6 years for these to basically become operational, at most, basically. I don't know about the others, but at least we got 20, close to 20 of them will be online in 6 years. And 20 out of 400 is 5% extra, and 60 that's under construction, so those are growing demand, is 60, well, 59,445, right? 59 divided by 448 is 13% more demand that's coming online. And now you think about, again, the supply side. How long does it to start a mine? If you start to explore for a mine now, from exploration to actually start production, typically takes 7 to 10 years. So even if people start production now, to exploration now, you won't have, the time just doesn't match. You will be drawing down your inventory quite a lot. All right. So people say, all right, maybe, yeah, isn't the world moving away from nuclear? I say it's not likely. Renewables are still not able to take over the world, mainly because 2 reasons. It's unstable, and then the cost of storage is actually very high. It's unstable. I can show you my own solar production. So I have a 4.8 kilowatt system, and you can see the difference between winter and summer is huge. This is like an 8 times difference. So basically you need to over provision 8 times if you want to cover everything by solar, which is just not economic. It's just not economical. You shouldn't be over provision 8 times for the least efficient production. And you say, oh yeah, it will balance out south and west. Sorry, south and north. But you don't have pipes going from Australia to US. You don't have pipes going from US to South America. And even if you did, the long distance transfer of electricity is fairly inefficient. And okay, so that's one thing. The other thing you say, oh, maybe we have wind and we store this energy. Yeah, but let's consider the cost, right? So the cost of lithium battery per kilowatt hour currently is 273. Tesla claim they can do it at the for the other type of battery that we were concerned about. It is like 133. Let's take it, say it's super efficient. Let's say 100. 100, assuming we do 2 cycles per 2 cycles per day, right? And that means this battery will last you about 10, 15 years. Basically, because so this is this is typically called just NMC. NMC, well, NMC short form. So these batteries last 1 to 2,000 cycles. Let's say they last 2,000 cycles. This means 4,000 days. That's a little bit more than 10 years. In any case, that just means you will need to pay like if you amortize over the cost, that means you have $100 per kilowatt hour, and then you do it 4,000 times, 4,000 days. So each day for each kilowatt hour of storage, you need to pay 0.25 cents. Sorry, 2.5 cents. I'm wrong, sorry, 2.5 cents. And if you look at this number, it's actually higher than the current uranium cost for the nuclear energy. But in any case, 2.5 cents additional cost per kilowatt hour of storage per day. And then on top of that, the charging and discharging of batteries as we do it now is about 90% efficient both ways. So you incur a 10% cost on each side. So that's, as you can see, these levelized costs are typically about 100, right? And then if you look at wind onshore 70, so you're looking at 15 cents. Sorry, 1.5 cents additional. So 15%. Sorry, 1.5 cents additional. So you're looking at 4 cents additional compared to the current cost of about 10 or say 7.5. That's a huge difference. That will push it over. If you add that up, you pushed it over the advanced nuclear. So the cost of wind. I actually have this thing. So it's at 2.5, 70, and then you got another 10. So basically that becomes equal. So you're not getting any cost benefits. At the same time, you don't have a 24-hour supply. You don't have a guaranteed supply. And that's why I think renewables will definitely have their place. They're fantastic in covering the parts where you have peak load during the days and whatnot. But we still need stable base loads. Okay, so the other thing that's happening is Japan is restarting its nuclear reactors. Japan has approved. Excuse me. They have approved, I think, somewhere here as 5 has restarted already. Yeah. And then 12 is restarting. They have 48. So out of all the things that's gone away, you basically get 17 out of 48 is for sure is coming back. Some has come back. So 35% of that is coming back. And the other thing you may ask, why is Japan restarting? Haven't they suffered enough? The reason is energy security and cost. I saw a chart where the Japanese energy cost basically went from about 10 cents per kilowatt hour to like 14. For industries where the majority of their cost is electricity, for example, the aluminum industries, this is a huge cost driver. It makes the Japanese industry so much less competitive in the world market. And also, it's about energy security. Japan is an island country. How they're going to get their energy needs? They could either do it oil, or they could do it nuclear, or hydro. Hydro they've been using, and I think most of the feasible hydro dams are already being built. And you say, oh, solar and wind. No, Japan doesn't have enough land. The whole place it's a small country with quite a few people. So the place is fairly populated. The non-populated parts are typically fields, and then these are being worked on. If it's not like US, you got Utah or Nevada where you get vast amount of nothingness. But so Japan can't really go for that. So in terms of energy security, so when it comes to war, they want some kind of safe, not even a war, just disruption, supply disruption. Something may happen, right? You can stockpile uranium. it's it's a lot more difficult to stockpile oil. The reason is energy density. So if you look at uranium, uranium's energy density per liter is here, and oil, let's say gasoline, is here. It's about same amongst other things, right? That's huge difference. To put that into perspective, I made a rough calculation. The Japanese electricity generation is 934 terawatt hours. That's in 2014. They might have grown, whatever. Let's take that number. And then for gasoline, this is how much you need. So this is the 934 terawatt hour divided by the energy density, multiplied by 3 is because of the thermal efficiency. These power stations aren't super efficient. Maybe it's either 2 or 3, somewhere between 33% and 55%. And then this is the size of it. So you do cube root, you end up with a cube of 6.6 kilometers. That is what that is basically something like 4 miles multiplied by 4 miles multiplied by 4 miles. This is a humongous amount of storage. You can't store that. And if you want to count it in super tankers, these VL, I think they're called VLCCs. Not quite sure. Yeah, so yeah, VLCCs. Yeah, VLCCs have a capacity of this much, 320,000 meters squared, and you basically need about 1 million super tankers, right? So if they fully supply their own electricity by oil for a year, that's how much they need. But uranium, you just need 20 meters by 20 meters by 20 meters, right? You could put it in a warehouse. So in terms of energy security, nothing beats uranium. So that's why I'm saying, so that's why I'm arguing Japan will restart all its reactors and build some more in the future. All right, so mixing all that up, I think uranium market is going to have a huge bull market because of supply destructions, demand is increasing, and then the price increase will not have a significant impact to the user's utility, because the user gets so much more utility out of this thing. It's so marginal of a cost, it does not impact it enough. And after those 3 supply cuts, this is what you see. This thing, I think it's probably a little, yeah, it's a little hard to see, but it was looking at, it was $20 for so long, and after those the last 2 supply cuts, basically, you're now at 26, and that is 6.5 divided by 20, so it just went up 32% in price within a month time. Now, that's 32% increase in the cost of the commodity that's being produced. So the miners whose equity that's dependent on the thing that they sell is going to go up a huge amount more. So my expectation is, I remember I said the marginal producer at the moment is producing at the cost of about $60. My expectation is this thing has to go to at least $70 within 3 years, let's say. I'm going to put a limit out there. And then within 5 years, this thing might end up at $100 or something. And the equity prices of uranium miners should go up 10 times, 20 times, even 100 times. And that's my thesis. But in the meantime, you can expect a huge amount of volatility, as these miners are always very volatile. Thank you for watching this. I don't know how long this video is. Hopefully it's not too long. If it's too long, I have to somehow manage to do a shorter video the next time. Thank you.